I have some breaking news at the top of the hour. President Trump has tested positive for coronavirus. U.S. futures take a leg lower. We'll be across this story the entire hour. It's the last jobs report before the election. The market expects 187,500 workers were added in September. House Democrats passed a $2.2 trillion stimulus package, but we're no closer to a bipartisan deal. And as I said, Trump has tested positive for Covid-19. He and the First Lady will quarantine immediately. If we take a look at what's going on with U.S. futures, we saw U.S. futures drop immediately on this news, taking a leg lower on the S&P 500 futures. We're down now some 0.9%. You can see that stock drop as the concerns mount about the president and the First Lady having Covid-19. This comes after a top aide that had traveled with him to Cleveland and then as well traveled with him to Minnesota, Hope Hicks. She as well contracted Covid-19. And as I said, the President of the United States and the First Lady tested positive for the virus. And we are seeing immediate market reaction. Joining us now is Frederic Carrière, Head of Investment Strategy at RBC Wealth Management. Frederic, a lot to digest. We've just learned this news out of D.C. with the president contracting Covid-19. Of course, this comes 32 days ahead of the election. It goes without saying, we, of course, wish the president and his family and anyone at all that comes in the path of this virus well wishes. What does this mean now? How do you prepare for the risks of this event?
Look, you have to have a framework of how things will work out over the next 6 to 12 months. And yes, in the short term, there is likely to be a lot of volatility, given how far markets have come from since March. COVID, festering trade war, U.S. elections, all of that can potentially impact markets in the short term, but over the medium term, 6 to 12 months, we do think that equities are going to be at a higher level than they are now. And so we urge our clients not to get caught up in all this frenzy that we will have in the short term, but to look at things a little bit more long term.
And Frederic, what does this mean for the U.S. election?
But for the U.S. elections, clearly the campaign is on hold at the moment. But again, we remind our clients that U.S. elections clearly an important factor. But what is more important for equities, for financial markets over the medium term is not so much who holds the presidency or how Congress is made up. It's more Fed policy and the business cycle. These are two factors which really drive the market and at the end of the day are a lot more important than day-to-day politics. So again, volatility in the short term. In the medium term, we expect the economy, we expect equities to be at a higher level.
And you expect that volatility, given this news? I mean, this is the health of the president of the United States. Do you expect that volatility to really surge based off this news?
Well, we can have until the end of the year, through the elections, depending on the result of the election, yes, it's very possible to have volatility. But again, take advantage of pullbacks. We have been underweight equities since March because we preferred on a risk allocated to allocate our risk to fixed income, where we were more comfortable with the risks. But with the pullback in equities, we're telling our clients to take advantage of some of these opportunities and build the equity position. As I mentioned, the economy is normalizing. We are in an environment of ultra-low interest rates. There is a reluctance to withdraw fiscal stimulus in most parts of the world, and valuations in the U.S. are slightly expensive. However, that can be justified by how low interest rates are. So overall, we feel more comfortable with the risks, particularly as, yes, infection rates are going up, but there seems to have been some progress in terms of how to deal with the virus, how to manage this virus, taking some precautionary measures and medical treatments. So overall, we feel more comfortable with the risks in the market. and we would not be too caught up in day-to-day movements of markets.
Federica, I just want to update our viewers if they're just waking up. The President of the United States and the First Lady have both tested positive for the coronavirus. As you could see the markets alongside me this morning, we've taken a massive leg lower now. S&P 500 futures down nearly 1.5%. Dow Jones futures are there already, as well as NASDAQ futures. Obviously, this is a huge risk to the market, one that wasn't priced in. It was definitely going to be a volatile session. Many say it's going to be a contested election, but not the health of the President of the United States. That doesn't seem to be priced in, given how much lower we are seeing in these markets. Frederic, I have to ask, I mean, we have a U.S. jobs report today. There's going to be so many things we got to digest, no stimulus. But right now, is this the only thing that really matters?
Look, the health of the economy is really, really important. And we believe that over the next few months, economic growth is perhaps going to disappoint. It might sputter. It is likely to underwhelm. But again, given the environment that we have, very, very low interest rates, fiscal stimulus, we do think that the drivers are there for modest growth over the next year. We don't think that we are going to go into the double dip scenario because of all these factors, but be ready for growth to be less strong than it was since the reopening, since the rebound. Be ready for disappointing growth, but we expect growth. Keep in mind also that despite COVID infection rates going up, despite more social distancing measures being put in place and economic restrictions, the economy keeps on growing. There has been some growth. Most economic indicators in most of the Western world are continue to point upwards. They may be not expanding anymore month over month, a suggestion that economic growth is slowing, but there is still growth. So COVID is with us. It is everywhere.
Frederic?
We are going to see an increase in, and you have to take precautionary measures.
Frederica, we just have some new lines coming from D.C. President Trump's physician says Trump and Melania are both well, and he does confirm that the President of the United States, President Donald Trump, does have COVID-19. You could see the market reaction instantaneously. S&P 500 futures, Dow Jones Industrial Futures, and the NASDAQ all down about 1.5% this morning. Frederic Carrier from RBC Wealth Management is going to stay with us. I want to dig deeper into what we are seeing in the markets this morning. Juliet Sally joins us now from Singapore. Juliet, good morning.
Hi, Anne-Marie. Yeah, really what we're watching here is this downtick that you are seeing in Japanese equity markets. They're the only ones that are of relevance today in Asia, and of course the only ones still trading with the Australian share market and New Zealand shut. So you have seen a big tick lower coming through in the Nikkei, down by about 0.9%. It was pretty flat earlier. We, of course, had Japan out of action yesterday for that trading halt, and we'd been seeing a little bit of fluctuation in the Japanese equity market, but now you are seeing a big tick down. The Nikkei off by about 0.8%. The Topix falling by more than 1.2%. This as we start to see money going into these safe havens. You've got the yen rising quite significantly against all the cross assets. If you look at the Aussie yen, really obviously a bellwether for what we see in these uncertain times. The Aussie down by around 0.8% there against the Japanese yen. So certainly seeing a flight to safety here. And as I'm talking, we're just seeing even further downward pressure coming through in Japanese equity markets. As we should mention, most Asian markets, Anne-Marie, are closed today for a number of public holidays. So you've got China, Hong Kong out of action. But what we are seeing is that downtick in US futures and in Japanese equity markets that have about, 50 minutes of trade left to go.
Juliet Sally with the market impact from what the news we are seeing in Singapore. Thank you so much. As Juliet was saying, we are seeing futures continue this slide this morning. S&P 500 futures down 1.6% alongside the Dow Jones and NASDAQ futures as well. Let's just recap some of the news we have this morning. The President of the United States, President Donald Trump, and First Lady Melania Trump have both tested positive for COVID-19. We've seen that immediate market reaction. Of course, we wish anyone that is facing this virus health and safety, especially in the White House. The U.S. President's physician has says he will maintain vigilant watch on the president, who is now quarantined. And he says that President Trump and Melania are both well. Still with us this morning, Frédéric Carrière, head of investment strategy at RBC Wealth Management. Frédéric, just digesting all this, you see the immediate market impact. As I said to you before, it doesn't seem like anything else will really matter today, even though we have those jobs numbers. We didn't get a fiscal deal. Does this start to now shift how you think about the U.S. election and where you might want to, where one may want to put money in terms of a portfolio?
Look, it doesn't. Again, our investment strategy is based on where we think markets, where we think the economy is going to be over the next 6 months to 12 months. It's not based on day-to-day trading. There's been a pullback in September, and that for us is a good opportunity to build certain positions in equities. We think, as I've mentioned, that prospects are better, risks are more managed than they were in March, and this situation in the U.S. is very, very unfortunate. There's a structure behind the president so that the economy continues to live. Companies continue to generate earnings despite what might be happening in the White House.
Yeah, and we see what's happening in the White House impact the financial markets this morning. Just 11 minutes past 6 a.m. here in the city of London, you can see futures take a massive leg lower. S&P 500 futures down 1 3/10%, alongside the Dow Jones Industrial. Nasdaq futures 1 4/10%. Today was supposed to be about the jobs report. It's the last jobs report, Frédéric, before the U.S. election. It's an important one, especially after this week alone. In one 24-hour period, we saw tens of thousands of job losses from massive global corporations. On top of that, it was supposed to be about that impasse on the Capitol. No fiscal stimulus just yet. And yet this story will most certainly dominate not just the news cycle, but the markets. And if you are just waking up this morning, we have learned that the President of the United States, President Donald Trump, and his wife, First Lady Melania Trump, have contracted COVID-19. They were exposed to Hope Hicks, who she contracted COVID-19. She traveled with the president and his family to Cleveland for, of course, the presidential debate. And then she also went to Minnesota for a rally